Passive income. All the rage right now, all my students are talking about it, and why not? Literally do nothing, sit back, chill, and cash checks. Yes, please. The most truly passive income out there is through dividends, where a company just pays you free money just because you invest with them. In this video, I'm gonna give you 4 of my top dividend companies and a couple of dividend ETF stocks as well. I'm also going to be giving you guys the pros and the cons of both individual companies versus ETFs. Which one is best? Also, I'm going to show you guys how to analyze any ETF because I am a professor and so I like to analyze things, look at data, geek out if you will. But all this is just going to lead to better disciplined decisions and hopefully more money, y'all. Real quick though, I'm super excited to be doing a collab today with Ryan Williams. If you guys are getting into the world of dividends in any way, he is the man. I follow him personally, especially when I'm looking into dividends because he's been doing it for longer than I have in the dividend space. His channel is 100% dividends. He goes over his portfolio, talks about new dividend stocks every month. So him and I decided to do the exact same topic, a video on the exact same thing at the same time. So after you're done watching this video here, go down to the link in my description and watch his video. All right. Individual company stocks or dividend ETFs? Which one's gonna be better to bring you more of a dividend long term? The pros of picking an individual company stock are, number 1, there's no fee. Number 2, there's more control of your portfolio. You get to pick exactly what company you want. So if you want more of tech or if you want more of home improvement or whatever you think is best at that time, you get to pick and you get to choose. The last pro would be possibly a higher dividend yield. And most times, certain companies have higher individual yields than do the ETF overall. The reason for that is the actual con for picking an individual company stock, and that is risk. If a company is going to offer something crazy like a 7% dividend yield, they're probably going to be a company that is somewhat volatile and their price goes up and down. Another big con is that companies can just decide not to have a dividend anymore. They can suspend their dividend. This doesn't happen often, but companies do it when they're low on cash or they're in debt or something like that happens. On the other side, the pros of investing in a dividend ETF are that it saves investors a lot of time and potential headaches compared to owning individual stock. It's very much diversified. You're getting a whole basket of a bunch of different companies in one. So if the technology sector happens to get hit super hard by the economy or something, that's okay because you're going to have stocks from different types of industries as well. The cons of a dividend ETF is that there is going to be a fee because it's being managed, and there's much less control of what's actually in your portfolio. If you wanted to have a higher percentage of one of the industries, the only way to do that is to purchase individual stock. Now that we understand the difference and the pros and cons between individual stocks and ETFs, I'm gonna tell you guys a couple of my favorite ETFs and then my favorite company individual stocks. And then at the end of the video, I'm going to tell you which of the 2 strategies I like best for me personally. So before I go over these ETFs that I like a lot, I know a bunch of you little keyboard warriors out there are going to tell me,
I can find a way higher dividend doing blah, blah, blah.
Yeah, probably through an over-leveraged or super risky type ETF or REIT or something that's totally different. And what I'm talking about is something long-term, stable, something that you can actually park your money in and expect a dividend always. Like I talked about at the beginning of this video, I like to look up ETFs and analyze them through etfdb.com. There's a screener on there to look up ETFs specifically for the reason why I'm investing. So if it's dividend or growth or just to see where people are investing heavily. For me, I always want an ETF that has very low fees, but that has a pretty sizable dividend. My first favorite dividend ETF is Vanguard High Dividend Yield ETF VYM. It has almost a 3% dividend that I can expect. And the most important thing is that the expense ratio is 0.06%, which is almost nothing. The second dividend ETF that's on my list is the PowerShares S&P 500 High Dividend Low Volatility ETF, SPHD. That was a lot of words to say. If you've been a part of this channel for any period of time, you know that the S&P 500 is my go-to. Kind of boring with my index fund picks, but you know what's not boring? Cashing those checks, sis. So the SPHD ETF has an annual expense rate of 0.3%, which is still very, very low, and offers a dividend yield around 3.5%. Those are my ETF picks. Now for the individual company picks. Now just a disclaimer on this one as well, these are all going to be companies that I could see somebody holding for life. Dividends take time to build up. That means that the company has to be around for enough time in order for you to actually take part in building up those dividends. So these are all lifers. Number one is Johnson & Johnson, J&J. If you haven't heard of Johnson & Johnson, I don't know where you've been. They have brands such as Band-Aid or Tylenol. They also have a crazy amount of prescription drugs and digital medical devices for operating rooms. This one is just a health powerhouse. One of the big things about this company is that they are a very well-run company financially. Their balance sheet is spectacular. J&J has also increased its dividend once per year for a whopping 6 decades. 60 years, every year they've upped that dividend. If you want a long-term bet, it's hard to find one better than Johnson & Johnson. Next is Verizon. As digital tools are a must-have for businesses and consumers alike in 2022, Verizon about as sure of a bet as you'll find, since folks will cut back on every other expense before they give up internet access. They're basically a monopoly or a duopoly with AT&T. It's very hard for other companies to even try to come into this space, so they kind of have the market cornered here. Verizon has a super high dividend of 5%, and the fact that they're just going to probably be around forever and be at the top forever, it's pretty good stock for me to own. Next is Morgan Stanley. They're one of the most iconic asset managers in the world in wealth management and investment solutions. Last year alone, it added $1 trillion worth of assets under management. This bank is nearly 100 years old, which means that it's seen many economic downturns and depressions and recessions, and it's still around. So it holds my vote for one of these companies that will continue to be around no matter what happens in the short term. And again, just a solid financial stock to have in your portfolio. And the last one here is one that a lot of people probably don't know about, but a bunch of rich people do know about it because it's in their portfolio, and that would be Consolidated Edison, or ED. This company's actually been around since 1823, and it started out as New York Gas Light Company. It's a utility company, and it's one of the oldest stocks in America. This company is awesome as an investment because for 48 years straight, they have increased their dividends to shareholders. So this company supplies electricity to New York City. You know, the city that never sleeps? Yeah, that city, with all of their lights and electricity. This is a good one to own. I don't think New York's shutting off electricity anytime soon. This one has a dividend yield of 3.3%, and again, just another good company to own in your portfolio. And now, for the moment we've all been waiting for, and for those of you that have stuck around, A+ to you guys. As far as picking in between the ETF or the individual companies, I have to go with my gut and with my foundation of investing, which is index funds or ETFs. For me personally, it's all about safety. Now I know in the ETF you lose a little bit of control as far as how much percentage of whatever industry you'd like, and you also don't get quite as high of a dividend as you do with individual stocks. But for me personally, it's all about investing long term and building that wealth long term. And so I'm okay with a little bit lower of a dividend, even though 3% is still a solid dividend, while being able to manage my risk by having a highly diversified ETF. I know that overall, these types of ETFs that I'm going to pick are going to grow steadily, the same way like the S&P 500 on average grows steadily. And so I'm comfortable parking my money there, letting it grow in appreciation, while also getting a dividend on top of it. I will be 100% honest with you guys, and the way that I actually do it is 80 to 90% of my portfolio is ETFs and index funds, while 10% or so is those individual stocks, so that I can control just a little bit of the percentage. But overall, if I had to pick between the two, it'd be the ETFs. That's all I got today. Professor G, out.